This is Kali Persall, editor of Institutional Investing in Infrastructure. I'm here with Rajan of Investcorp Corsair Infrastructure Partners, or ICIP, to talk about the outlook for the transport and logistics sector. Hari, just to start, can you please provide a brief introduction of yourself and your role at ICIP?
Fantastic. And thanks again, Callie, for doing this. It's really great to be speaking with you. So I'm the managing partner of Investcorp Corsair Infrastructure Partners, which is a $5 billion infrastructure equity sponsor. We are 50% owned by Corsair Capital and 50% by Investcorp. That's a partnership that was formed at the end of 2023. I myself have been with Corsair for 25 years. And have been active in a number of different strategies across alternative assets. Was originally a partner on the buyout side of our business, focused on financial and business services, and then helped establish our infrastructure business in 2015, and have been leading that business and helping to grow it to what it is today over the past 10 years. Our business on the infrastructure side focuses specifically on transportation, logistics, and related subsectors. We make value-added investments in and around three key verticals: airports, container shipping ports, and toll roads. So we really cover air, sea, and surface infrastructure.
Great. Thank you, Hari. So can you just tell me a little bit about the case for investing in transportation and logistics infrastructure assets in 2024?
Absolutely. I think, the investing environment in transportation and logistics today really benefits from a very significant and pressing need for large volumes of private sector capital to be deployed in critical infrastructure assets. We believe that specialized investors who can do that effectively will have the ability to generate very strong risk-return propositions. That certainly favors our investing model, where we seek to bring to every equity investment that we make a level of development and operational expertise, such that we are providing both equity capital and operational management in kind of an aligned and integrated manner. That's a model that we've quite successfully applied, for example, in our airport investments here in New York, which include the landmark redevelopments of both LaGuardia Terminal B, as well as JFK Terminal 6 and 7, north side of JFK. Both of those are operated by our dedicated and wholly owned airports platform, Vantage. So we're really at a point in time where there's strong recognition across, I would say, all key constituencies of the underinvestment in some of our key transportation networks over the past decades, and the increasing stresses on shifting and, frankly, expanding global supply chains. We really need to upgrade, revitalize, and improve the overall service quality of these networks. And given fiscal priorities and budgetary demands, not only in the US, but around the world, the private sector does need to play a key role in that, in partnership with central and local governments. So that environment generates opportunities to invest not only in key assets like an airport terminal or a container port or a toll road, but also in businesses that operate within the broader ecosystems that exist around those types of assets, providing an important service or function like airport baggage handling, tolling transponder technology, maybe systems that help landside operators access and interact with ports more efficiently. We're really excited about all of that and think there is tremendous opportunity in the coming years.
So moving into the second half of the year, are there any challenges facing the transport and logistics sector, and how are stakeholders addressing those?
Really good question. And look, we know there's a pressing need for capital deployment in our sector, but if you put yourself in the position of a current asset owner, right, a government entity that's representing the public interest, the decision to partner with a financial sponsor, it's not really an easy one, right? One of the challenges we see in implementing large public-private partnership transactions in the infrastructure space is a very understandable hesitance or reluctance on the part of policymakers to entrust private investors with critical assets without fully understanding the investor's approach to the long-term development and, frankly, operational management of the asset, and how that's built into and aligned with the investor's thesis, right? The corollary to that from the investor's perspective is that in this interest rate environment, it's really hard to generate the requisite returns if you are simply a pool of capital that shows up at the right time in the right place. That's obviously essential, but you need to have a value creation plan that's thoughtful, credible, and importantly, that gets implemented through a partner that's not just a marriage of convenience entered into for the purposes of a specific transaction, but rather represents a deeper, longer-term relationship where there's strong alignment on investment strategy, duration, risk, and what value creation levers to prioritize. That's certainly what we seek to bring to our investments, and a great example of that is our relationship with DP World, who is one of the world's leading container terminal and related logistics operators, and who we've invested with very successfully in Australia, and are expanding that model into other regions.
Thank you so much. So, given your background, what key trends are you seeing in public policy that you think are shaping the infrastructure asset class? And where do you see the most opportunities going forward?
Absolutely. And look, we are in a sector where there's a very profound intersection of public policy and investment strategy and investment theme development, right? So here in the US, we benefit from a generally favorable public policy environment, I believe, as it relates to infrastructure development in general and transportation in particular. I think there is a widespread desire to restore our national infrastructure to the leading global position it occupied in prior decades. And it's an area where you see significant bipartisan support. So I think as policymakers become more comfortable with P3s, with private partnerships, and the various models that can be implemented and tailored to specific assets and specific situations, we're definitely going to see transaction volumes in our space continue to grow really across the board. There are two specific areas of public policy that we are particularly focused on in the context of transportation and logistics, and those are energy transition and digitization. Now, these are obviously two areas that are infrastructure investment subsectors themselves, right? If you think about all the capital that has been deployed in renewable energy and digital infrastructure assets. Now, we don't invest directly in those sectors, and obviously there are some concerns about them being overbought, right? But these are themes that we feel present themselves in very compelling ways in the context of what I would call more traditional transportation investing. So, for example, some of the work that we're doing in airport modernization, including initiatives that are kind of as low tech and simple as simply installing more efficient heating and cooling systems, those can have very significant impacts on the energy transition, resilience, decarbonization agenda, given the size and scale of our assets, right? Similarly, I would say surface transport, including toll roads, is a space that is really in the early stages of development in the US, and that's a modality that we think will be increasingly attractive to states and municipalities as they seek to upgrade their roads, bridges, and tunnels. We're invested in a toll road platform in Europe that has a long operating history and expertise. And we see an opportunity to bring some of those competencies to the US. Clearly, there's an intersection there with the electric vehicle space and the need for charging infrastructure, which is obviously a much talked about topic. But we think that surface asset owners, toll road owners, operators can and should play an important role in developing those networks as part of the overall kind of EV journey in the US. I would say in terms of the other public policy area, the transportation sector has significant potential for increased automation and digitization of any number of processes related to the movement of goods and people, right? Some of which remain shockingly manual and labor intensive and quite antiquated, paper-based. There are also a number of opportunities to better leverage the data and information that is generated from travel and trade to create better service offerings and opportunities. So again, that's an example of applying, a theme that can be attacked in many different ways, digitization, automation, to a specific industry sector, transportation, where specialized knowledge and skill can result in some very strong investment propositions. And all of these public policy priorities intersect with investment themes, and that's an intersection that is at the core of what we do.